morning once again. This is Nigeria Reality TV. Please stay active and subscribe to our channel if you are joining us for the first time. Thank you.
Good morning and welcome back once again to this report and this very important analysis. Today being the 13th of May 2026, I want you to pay attention to really listen from beginning to the end, because I'm going to be striking some chord this morning, especially regarding the information that came to the ecosystem yesterday regarding the 200 million restrictions policy by the government that was peddled by a comrade. Now, there is a need for light to be shed on this for broader perspective, and for those who seems to be confused, because a lot of uproar came into the ecosystem just yesterday when that message came in forward, that it was because of the policy that disbursement have not been made to all of the expectant beneficiaries. So there is a need for clarity of that, so that we can all be on the same page. Yes, there was a new introduced policy by the Central Bank of Nigeria, which was effective from January 1st, 2026. And the key point that a lot of people are misunderstanding is the difference between the cash withdrawal limit and the electronic transfer capability. And the current CBN policy mainly have to restrict the physical cash withdrawals and not the legitimate electronic transfers running through the banking system. So please follow me gently as I move on in this explicit explanation. So having to use the 200 million naira transfer restriction limit as the main explanation for the prolonged disbursement delays does not really flush. It doesn't align, it doesn't synergize with the actual policy direction of the CBN in 2026. Now, the revised policy of the government clearly removes the cumulative cash deposit limits and also the excess deposit fees, which we've talked about right on this platform some months ago, if you could recall. And in simple terms, individuals and organizations can now deposit large amounts into banks without any form of penalties. And what the CBN tightened, what they really goes against so much, were the cash withdrawals. You understand? In other words, individuals are limited to 500,000 weekly, while the corporate organizations are limited to 5 million naira weekly across all the channels before excess withdrawal charges can apply. You understand? So, and I want us to understand that distinction so clearly. It's very important. The policy is really aimed at reducing Nigeria's dependency on physical cash, while the policy tries to encourage electronic transactions on a more deeper level. All right. So the CBN itself also stated that the objective is to really strengthen the digital banking and reduce cash handling cost, while trying to improve security and also combat money laundering. So what this means is that Nigerian financial system is actually moving toward large economic transfers and not moving away from them. Right? It's not moving away from them. So if someone claims that 200 million naira cannot be transferred because of the CBN restrictions, I think that claim is really misleading, unless they are specifically referring to physical cash withdrawal over the counter. Because if you say because of the 200 million policy or the limit policy, then that's why we are being delayed. from distribution. Of course, no, there's a provision for transfer of cash even more than 200 million. You understand? Electronic transfers operate so differently from cash withdrawals policies. So, and if you go further in that, the modern banking, in modern banking, large transactions are commonly processed through the platforms of the RTGS, the NIBS infrastructure, after proper compliance checks are being carried out. And large value transfers always happen daily between companies, between contractors, between government agencies, between importers, between exporters, between institutions, even between banks themselves. You understand? So the banking system does not suddenly have to freeze because a transfer, a larger transfer is 200 million or something beyond that. No. What usually happens is that the bank conducts compliance checks on the fund. Then the transfer may be flagged for anti-money laundering or the CFT review just temporarily, and the sender also may be asked to come and explain the source of funds or the documentation, and also provide additional KYC verification which may be required. Then the compliance officers may now have to review the transactions before approval is done, and then payment is guaranteed. So, but none of this automatically mean that the transfer is impossible. No. In fact, and a very big in fact, anti-money laundering checks are normal, and they are part of the normal banking procedures worldwide. They are not unique only to Nigerians, and they do not amount to any kind of prohibitions on large electronic transfers. So the revised CBN circular itself focused heavily on cash movement, not on digital transfer prohibitions. So if our disbursement process has experienced long delays stretching over months and years right now, it would be so much inaccurate to reduce the explanation to CBN restricted 200 million transfer or the policy. Right, that narrative oversimplifies the issue, and it can create a lot of tension, among which, of course, we saw yesterday. And these are not familiar processes, and there is a way the banking regulations work which is far away from what the comrade stated. So if there are genuine delays that are more likely connected, which we have been seeing some of them in recent times, but I think if there are more to that, this may be due to largely some internal authorization processes, some compliance verifications, some institutional approvals and funding readiness and what have you. You understand? So those are more realistic operational reasons than claiming that the CBN completely blocked 200 million transfers above and all that. Going further to that, Nigeria today, Nigeria operates today in a heavily digital financial environment where businesses routinely transact amounts that are even far above 200 million electronically. The government ministries, the oil companies, the telecom firms, the construction firms, international organizations and financial institutions, they process huge electronic transactions every day. So if 200 million electronic transfers were impossible, just because it has to do with the grant that we have to receive, you understand, under the CBN rules, then large sections of Nigeria's economy will practically stop functioning because of that. So that it cannot even be it. And that is why the distinction between cash and electronic transfer must not be mixed together. Right? The CBN 2006 policy can be summarized under the large cash deposit, which is allowed, the large electronic transfers, which is allowed but subject to compliance checks. You understand? Then the large cash withdrawals, which is restricted and also chargeable. And that is how the framework is. You understand? So we have people that misunderstand the anti-money laundering monitoring and assume it means rejection. Monitoring is not prohibition. No, banks are expected to report suspicious or unusual large transactions to regulators when it happens, and that is part of the international banking standards and Nigerians' commitment to anti-money laundering reforms. So we also understood that Nigeria was recently removed from the FATF monitoring list, and regulators are now under pressure to maintain stricter oversight on financial flow. So naturally, banks have a way they scrutinize large transactions more carefully, but scrutiny is not the same thing as banning transfers. You understand? So it cannot be mixed together at all. This is where a lot of narratives becomes exaggerated in actual fact, and a transaction can be delayed briefly for some documentation or compliance reviews or checks and still eventually succeed. You understand? That is different from having to claim that the bank system or the banking system has forbidden 200 million transfers entirely as a limit quotient. You understand? That revised policy shows that the CBN is actually actively engaging and encouraging digital transactions over physical cash handling. And in other words, if someone genuinely needs to move 200 million today, the banking system would prefer it electronically, you understand, rather than physical cash withdrawal. And that is exactly the direction the cashless policy is headed. You understand? So from an analytical standpoint, using 200 million naira transfer restrictions as the major reason for prolonged disbursement delay appears so weak and inconsistent with available policy evidence. You understand? It's more accurate to say that large transfers may undergo enhanced scrutiny. Yes, banks may also require additional documentation. Compliance approval may also take time, and institutions may have to conduct some layered verification before final release happens. So, but saying that CBN does not allow 200 million transfers or above that, and that's the problem we're having, is not supported by the actual circulars and reports currently available. You understand? Then finally, another issue is that people usually confuse transfer channels. You understand? There is a difference between the ATM withdrawal, the POS cash out, over-the-counter cash withdrawal, ordinary mobile app transfer, the NIP transfer, and the RTGS settlement. They confuse all of them together. Large institutional payments do not rely on ordinary ATM or retail transfer structures. They usually pass through the corporate banking systems and also the high value settlement infrastructure. And that is why comparing that kind of a limit of million institutional transaction to ordinary consumer withdrawal rules is technically incorrect. You understand? Even the revised CBN policy itself has a way it repeatedly emphasizes on cash withdrawal limits rather than electronic transfer bans. So if a group or organization is experiencing any kind of delay or just streamlining it to what we are facing right now, I think a kind of transparency would require giving more concrete operational explanations to the course, instead of having to present CBN transfer restriction as though the banking system cannot process 200 million limit electronically. You understand? We deserve more than that. All right. So the facts available currently shows that the CBN removed deposit limits. They encourage electronic transactions. They restrict heavy cash withdrawals, and also they maintain anti-money laundering monitoring for large transactions or transfers. But none of these points amount to a blanket prohibition on 200 million electronic transfer limit. You understand? So while compliance procedures may slow down some transactions temporarily, the idea that 200 million naira limit cannot move electronically because of CBN policy is largely a misunderstanding. of that 2026 banking regulations. I just mean to provide some clarity to this so that we can all be on the same page. So that assertion is misleading from that comrade. And if you possibly get confused on this, just listen over and over again. Get from the beginning down to the end to get all of the analysis of this particular provision. Is going to help us a great deal to understand what the policy is about, what the restrictions are about on withdrawal and on transfer, as the case may be. Thank you very much. This is Prince Cecil. If you have listened up till now, you are a very wonderful, heavy, diligent listener. In the meantime, don't go anywhere. We'll be right with wonderful update again. Thank you so very much and wish you a very wonderful Wednesday.